Alright guys, welcome back to MMG Invest and WolfPack Cryptos. In this video I will cover the stock market real quick before the opening bell tomorrow, which will be New Year's Eve. And we'll see if we get a rally tomorrow morning or a continuation of a sell-off, and this was just a dead cat bounce. Now, I did buy into this, right? Into this bounce. So far, it's a bounce. You can't say it's a reversal until the price rises back above where it broke down from. Now, this is a daily chart of the S&P 500. Now, let me get this out of the way. This is not financial advice. This is my own opinion. I could be wrong. I am not your financial advisor. Consult your financial advisor. And this is more of an educational channel. Once this video is uploaded, it's pretty much obsolete. Do not invest anything you're not willing to lose or lose sleep over, and have your stops in place and emotions out. And do not use leverage if you're not experienced. You will lose your money. Alright, so here's the daily chart. Now, the TD sequential indicator, it does have a 9 in the backdrop, and that's for the downward move, but there's also a 1 and a 2. Now, for the Trading Academy, for the private members of WolfPack Cryptos, I did provide the TD indicator and, you know, information on how to use it, how to read it, how to understand it, and whatnot, so you guys understand more of what I'm talking about. So we do have a 9 sell for the downward move, but we have a 2 count on today's candle, and this is already Monday's candle, right? Or actually, it's not. Monday's candle. So this is Sunday's candle. This candle will it will end in a, I don't know, about 2.5 hours, and it's not looking that great. It's turning into a doji or an inverse hammer, and we would want to see today's candle, although it shouldn't. Okay, the markets did open technically 7 p.m. for Sundays for U.S. Eastern Standard Time, because that's when the markets open internationally. I believe Asia starts trading, or yeah, Asia, and then in a few hours Europe wakes up, and then they start trading, and then about 10 hours from now, about 12 hours from now, the US starts trading. But there is overnight trading as well if you're gonna pay to trade overseas with a foreign account, which you could do through your American brokerage accounts. I don't want to get into that. Anyways, so I did buy into this. When did I buy into this? I even forgot. There's so much going on. It was a while ago. It was earlier in the week. Thursday or something, maybe Wednesday or Tuesday. When did we get that rebound? Either way, I mean, the markets rebounded like 900 points. It was the largest rebound ever, and mainstream media was all over it. Of course, it was the largest bounce from the largest correction ever, and the worst December in since like 1931, something like that, since like the Great Depression. So here, NASDAQ, E-mini 100, and Russell 2000, I moved my stops higher above entry price in case this dead cat bounce is extremely small. So where was the price then? Well, that was the NASDAQ, was 600. So that's why I don't remember, because I'm trading the NASDAQ and the Russell. I'm not exactly trading the S&P 500. Now here we go. S&P 500 4-hour chart. The markets are a bit oversold on the short term. I am taking off my shorts, taking profits in case of a rebound or large bounce, and thinking about buying for the short term. This was December 26th, and this is when I put on the trade. It was below 2,400, so I'm definitely still in profit. And right now it's at around 2485, the S&P 500. So tomorrow morning I will have to be up, and we will see how the market trades on the open. Now, of course, Trump had to try to pump the market. I mean, he tweeted this out Saturday, I believe. And obviously he wants the market to trade higher Monday on New Year's Eve. So the markets close the last day of 2018 higher, and the price doesn't fall back down, because it'll be the worst December since like the Great Depression. So you don't want that to happen. So you definitely want momentum to stay towards the upside and keep the rally going, right? So he tweeted about the trade war in China, that he's going to have a meeting, and there's great deal coming, blah blah blah, right? So we'll see if this turns out to be true, or if it's just hype, or he just tweeted that out so Monday the markets trade higher, right? And yes, I don't agree. He should not be tweeting about markets. He's really going to regret that later on. All right, so here's the 4-hour chart of the S&P 500. This is bullish, right? It's a little strange. I mean, the last hour of Friday, last hour of trading on Friday, there was a huge rally the last hour before the weekend, which was strange. And you could, conspiracies, the plunge protection team, I don't know. But, usually people, after a giant correction like this, they're afraid. They're afraid to hold stocks over the weekend, because you don't want to wake up, in the morning, you don't want to have the opening bell go off, and then you're all of a sudden down like 10% or something instantly. So that was strange that Friday, the last hour, the markets rallied, because usually when the 2 is trading below the 1, it's done. The 3 never trades above the 2 again, and the odds of that are very, very unlikely. So it is a bit strange that that did happen. All right, so technically we're on a 5 count now, but look at this. Look at the shadow of this wick. It's turning into an inverse hammer, and that's going to shoot the price down. So when the hammer is upside down, that signals, bearish trend back down. It's a bearish candle pattern. So let's take a look at the oscillators. Now, I did want to show you guys something on the daily as well. You can see that prior to the price breaking down from this major support, which was the 200-day moving average, and this was a major support area. It was right below the descending triangle from the all-time high, which was up here. So the all-time high was up here. And then we had that 11% correction. The price then bounced, and I was expecting the price to trade within the range of this descending triangle from the all-time high, but it actually broke down sooner than I thought it would. But I wasn't paying attention to the moving averages. They were already starting to roll over, right? So before all the moving averages crossed, and we had a death cross on the S&P 500, And you can literally see the 50-day, the 100-day moving average crossed, and we had a death cross, and the moving averages crossed. Well, ignore this blue line for now. Now here's the 200-day moving average, and that was also holding up the price. That's why we had a major support area down here. And when was the last time the 200-day moving average was broken? It was back in late 2015, early 2016, and that's when the Federal Reserve started raising interest rates again. I've talked about that. I don't want to go into that again. So, as of right now, this is very negative, right? But that doesn't mean that we can't get a nice little rebound back towards the area from where the price broke down initially. Now, I am in this trade. I'm still positive. I've moved my stops up. So if I get stopped out, I'm still going to take a profit. But I want to let this run just in case. So I'm not going to just take profits tomorrow morning. We'll see if the price breaks down and it could rally higher. But let's take a look at these oscillators, see if they could give us any indications that the price could still go a little bit higher. Looking at the daily chart, so the RSI is overbought, but you know that could stay up overbought for quite some time. The MACD, it still has to cross back up to the upside. The CMF, it actually is flipping, and it's flipping up to the upside. And the momentum indicator still has a lot of room to run. So I'm not going to take profits. I'm going to let this run. And if it doesn't run and it breaks down again, that's fine. I'll get stopped out, but I'll still have I'll still take profits because I moved my stop loss higher, right? So let's take a look at the smaller time frames. Let's take a look at the 4-hourly. So the oscillators are bullish for the CMF. It still has more room to run to the upside. So does the momentum indicator. The MACD already crossed to the upside, but it could keep running higher. And the RSI is overbought, but it could stay overbought for a little bit longer. So the oscillators are still positive. This candle, although, is not positive, and we'll see where the market's trading overnight. So when you wake up in the morning and the price is higher than 2,485 on the S&P 500, then more than likely it's going to rally. But if it breaks down overnight, that's not good. Then there's a higher probability that that this isn't going to be a continuation of the bounce or rebound. But you can see that I have these moving averages, the green line and the red line. That's a moving average crossover. And it's another indicator I use, which I will be releasing in my trading academy. And I like using this sometimes because when the red crosses above the green, then the price will rally. And you can see that the price rallies prior to the cross even happening. So there's more indicators on the short term. So for the next few days, maybe a week, that the price can continue on rallying higher. But the long term, I think the all-time high is in, and the price is going to, long term, just keep going down and down. All right, and that's due to fundamentals. It's not really due to technical analysis. Although technical analysis also is very bearish. All right, it is. Right now we're sitting on let me go to a daily chart so we can see this. Right now we're sitting on the 23.6% Fibonacci. Well, we bounced off of the 23.6% Fibonacci. And it's a correction until it falls below I would say 30. Well, once it falls below the 23.6%, it's bear market territory. You're in a bear market, okay? Once it falls below 38.2, I mean, that's recession, okay? Well, it will cause a recession. The stock market's not really supposed to be that intertwined with the economy, but it is, and that's a whole different video, which I will go over when I go over the fundamentals. It's just tonight, I'm tired. I don't want to make a 4-hour video. So, we've had 20% corrections in the past, and the price recovered. But once it falls below this first Fibonacci, it's not just a dip. It's not just a correction in a bull trend. It's not just a pullback. That means we're going into a bear market, okay? Now, bear markets, typically last a few years, but this one I will talk about when I talk about fundamentals, why it might possibly not be like the 2008 recession. It might not be like the 1987 crash. It might not be like the dot-com bubble bursting, NASDAQ bubble in 2000. This one's going to be big, okay? I'll talk about that in another video. But as of right now, this is just a dead cat bounce, like I said in my last video. So, are there any indicators hinting towards this bounce? Is it going to be sustained for the next few days? Well, here's the NASDAQ E-mini futures 4-hourly chart. And this looks like an inverse head and shoulders, which is good. That means that there's a little more upside. Let's also take a look at the Russell, because I'm trading these. And I think the Russell and the NASDAQ are very good barometers. They're leading compared to the S&P 500. The S&P 500 and the Dow, I don't think they're leading. I think these smaller indexes are, because they're more prone to I wouldn't say news, but fundamentals, because more savvy traders are trading these smaller indexes, and then ETFs as well. All right, here's the Russell 2000 on the left, and the ProShares short Russell 2000. Let's take a look at the Russell 2000. This is a daily chart. So we do have 3 candles, green candles in a row on the daily chart, right? That's a very bullish pattern when you have 3 candles trading above one another and they're green. So that's good. Let's go to a 4-hourly. Oh no, I can't. Never mind. Anyways, but the Russell, it looks very bullish. How did the NASDAQ look? Let's take a look at that. The daily on the NASDAQ. So here's the daily on the NASDAQ. Not quite 3 candles in a row, but it's bullish. We have 4 candles trading right above each other, at least the bodies, not the wick, but the bodies. So that's another bullish pattern in my opinion. And as of right now, I still think there's more upside to this dead cat bounce or rebound. Now, at what point am I wrong about the all-time high being in? Well, if we go back to the S&P 500, I will officially say I'm wrong when the price could get back above the 200-day moving average and the 100-day moving average. At that point, I will admit I'm wrong. So, anywhere above 2,600, at that point, looks like the market's recovering. And it would have to stay above it. And then it'll start making more all-time highs, new all-time highs. But I highly doubt that's going to happen. the likelihood of the price breaking through this major support area, so when the price breaks below a major support area, what happens is that major support area turns into a major resistance area. And I really don't think the price is going to be able to break through this in the next coming days, weeks, and months. No way. Just let's take a look at the monthly. I'm just curious. I haven't looked at that for a while. Let's have a clean chart. So I know I titled my videos "Crash," this and that. It's not a crash yet, just yet. It's really nothing. It's just a dip or a small correction. So here's 2002 going into 2003. The NASDAQ.com bubble popping in the 9/11, right? Look at that. And on the monthly, the price tested the 100-month moving average and bounced right off of it and went back into a bull market. Of course, Alan Greenspan back then, he lowered rates to help that happen. And then Bernanke started raising rates, and I think since 2006, and then the market rolled over and crashed because he started raising rates. It popped the bubble. And the same thing's happening right now, right? We started raising rates, and now we're popping the bubble. So the 2008 recession, that correction in this giant multi-decade bull market, right, bounced off of the 200-month moving average. All right. As of right now, we're not even hitting the 50-month moving average. We haven't even hit that yet. So, but when we do, that is essentially, I mean, the price would be going all the way back to when, let's take a look, to when Trump won. So all of the gains in the past 2 years from Trump's inauguration or becoming president or the election, right? If the stock market continues to fall to the 38.20% Fibonacci, all the market did was give back all of the gains that we gained during the first 2 years of Trump's presidency. And it would still be okay. Like, you're not going to notice too much of a difference in the economy. Now, once the price does fall below the 38.2%, that's when you're really going to start seeing people lose their jobs and massive layoffs. All right? So it's not like end of the world until we start falling below the day Trump got elected, if that makes sense. Because this was the 2008 recession right here. So you could officially say we are in a full-blown bear market going into recession. Yeah, right at 2,000 on the S&P 500. But that's not the point of trading and investing. You want to be early. So let's take a look at gold. Gold. Here's gold. Now, I know everyone's FOMOing and they want my research analysis report on gold. And I get it. But relax. It's not going to take off without you. The gold mining stocks, they really haven't taken off. Gold's going to pull back. They're going to slam it. That's another reason why I think the stock market's going to go higher tomorrow morning. And they're going to slam gold all the way back down to like 1250, somewhere around there. And that'll be your another buying opportunity to buy the mining stocks. But after that, you're really pushing it. And the price is just going to keep going higher and higher. Unless a black swan event happens, something happens, I still think gold is going to pull back one more time to give you one more buying opportunity, which is great because I need a little more time with my website and my journal and my newsletter and the mining stock research and all that. So, because it's really time consuming, and you know, the holidays, everyone wants to steal your time. Don't worry, guys. I don't think the mining stocks haven't really taken off all that much, and it's not too late. I get it. The gold futures price keeps going higher. Doesn't mean that people are buying mining stocks. Actually, mining stocks were slammed like a day ago. Not a day ago, Friday or Thursday. So you'll still have another opportunity. Although I am going to take profits on my ETF that I bought. So here's a daily chart. RSI is overbought. MACD is going to cross. So there's going to be a pullback on gold. That's what I believe. Plus, you know, they're going to slam it back down. They can't let gold go too high too quick because it's a huge red flag for the stock market. And that could actually help sell off the stock market when gold goes too high too fast because it's a flight to safety. And that means that people know something's up. And when people see other people are freaking out and they're going to the safe haven assets, then they might think, oh my God, there's something I don't know. And then they're going to do the same or at least sell their stocks or their high risk positions. But gold's not going to take off until the dollar tanks. All right, guys? And the dollar, it's not doing much. It's trading sideways. It's not doing anything. It's just trading sideways. And we still have a giant cup and handle on the dollar. So the dollar could still break out. And I wouldn't be surprised if it breaks out one more time. And that's because of geopolitical problems in Europe, like Deutsche Bank. I think Europe's going to go before the U.S. and the dollar is going to rally and the euro is going to sell off and really start imploding. And that's why I think the dollar is still going to go higher. And, you know, these mining stocks and gold is still going to pull back like one more time or maybe two more times, something like that. All right. But the time is running out. I mean, I wouldn't want to risk it past the first quarter of 2019. What else am I looking at? I do want to look at crude oil. WTI crude. Let's just look at this real quick. Man, look at oil. This is unbelievable. This is why Trump is a huge fan of Saudi Arabia. this is why I think Trump, you know, they don't care what Saudis do. This is why. Because they're going to put a supply out on the market and oil's going to fall. The U.S. is going to sell oil and the pumps in the U.S. are going to be, you know, the gas is going to be cheap. And it's kind of like a stimulant. It's like a tax cut, stimulus to the economy. Because when gasoline is cheap, guess what? People have more extra cash to spend. And they kind of boost the economy. People will go buy things and, you know, they'll buy other things besides gasoline. And not just that, it's cheaper to transport goods. And so prices don't go up. And then it's sort of, as a whole, it boosts the economy. When you have cheaper energy, it's really good for the economy. So, but it is on support here. Major support. And I wouldn't be surprised if we get a bounce on oil. And I know oil is like not easy to trade. But look at this wick. That's a nice buying wick right there. Look at that. And it's sitting on major support. I mean, I don't see this breaking, to be honest. Yeah, I mean, it shouldn't break. Here, let me draw the support line. You can see the price has tested it numerous times, from above and below, right? It took it a little bit to break through $40 oil, but once it did, it ran all the way up. Then $40 was a nice support area, and it will support back here as well, and I expect it to be support again. This is a weekly chart of oil, by the way. Alright guys, so that's my market update for the stock market for New Year's Eve tomorrow. And yeah, if you guys enjoyed this video, thumbs up, share it, and leave in the comment section what else you guys want me to cover and talk about whenever I can, because, you know, I am just one person with limited time. You guys have to remember, I have to do research, and I do have a life, sorta, not really, but, you know, I still work out, you know, I still do things. Yeah, share my videos, leave in the comment section what you want me to cover. I will be making more fundamental videos covering the fundamentals and economics of the entire international monetary system and the amazing times we live in, and how these central bankers have screwed everything up. Alright guys, until next time.